Welcome to the Make Tomorrow podcast, where we explore the intersection of technology and innovation and customer experience. Today we have a special guest, John Batistich. Not just special because he's had 30 years experience working across digital transformations, customer experience and human resources, but because we've worked together before as well.
We have.
Which has been fantastic.
Yeah.
John has held various executive roles with Westfield, PepsiCo, Wrigley's, Kimberly-Clark and more. He's built a reputation as a strategic growth expert, understands how brands evolve in a rapidly changing world. He served as non-executive director of Zip.co, where he saw the business scale from a startup in 2016, which was to over $3 billion business. And I think you said at the start it was about a $23 million business.
Yeah, we had 19 people. We'd backdoor listed with $23 million market cap in 2016. And when I left the board very late last year, we exceeded market capitalization of $3 billion. It was never a straight line, and there were some very difficult moments, but that growth story is something that fascinated me, and really I wanted to understand more about how did high growth companies continue to grow, and why were they different? So that's an area that I'd love to talk more about.
Yeah, fantastic. We will. And that's not the only one. So Stellar Group BPO, which we talked about before, was owned by a similar private equity that we had with ARC in the past. And also another excellent outcome, and the Heart Research Institute. And you're currently on the board of Foodco Group, Kasubi, and Versa AI. So we'll get into talking a little bit about all those sorts of areas. But firstly, you've just completed a study on what differentiates high growth companies and how they consistently outperform their competitors. And you've come up with 10 characteristics of superpowers. So I really want to focus today on those 10 characteristics of superpowers, because I think that's fascinating. And when I looked at them before, that just something that's just really enlightening for people and how to grow their business. I will try and put a technology lens on it as we go through, but I mean, these are some fantastic stories. So can you talk a little bit about how that starts and what sort of companies and sizes?
So I think learning from the most disruptive and fastest growing companies on the planet is valuable for all businesses at any stage or any size. And when you look at the highest annualized compounded returns of any stocks over the last 20 years, and we look at those companies that really outperform consistently over those 20 years, there's a really clear story. Companies with more than 30% compounded growth are companies like NVIDIA, Netflix, Amazon, and Axon, which is a defense contractor. Companies with over 20% compounded growth consistently over 20 years include Adobe, Cognizant, Intuitive Surgical, United Health, NVR, Home Depot, and Microsoft. So, and most of these companies, when you look at them, have a technology bias, and they have consistently grown over those 20 years. And I think we can learn from some of the common characteristics. And there are 10 superpowers of these businesses. One is they have inspiring founders. Mm-hmm. And those founders are visionary storytellers. And we may kind of talk a little bit about that a little bit later. Two is they've created adaptive, innovative cultures focused on solving big problems, big customer problems. Thirdly, they do deliver relentlessly better, addictive products. Okay, they're products that they're used frequently, high interactions, and they've got often beautiful UX. Right. Fourthly, they use those interactions to fuel personalization in this self-reinforcing loop. So personalization delivers greater utility, and ultimately those products become, have the highest NPS, the most intense customer love, call it. Mm-hmm. Fifthly, these businesses converge a range of innovation. It's just not product. They'll use service, customer experience, channels, financing, networking, and business models. And they work in areas, sometimes they create them, or sometimes they get into critical tailwinds, technological tailwinds. And we'll talk through some examples later on. Sixthly, these businesses have a bias to reoccurring revenue models. So subscription-based models in B2B and some B2C. And these models have high switching costs, low churn, and as a result, valuations, given the certainty of those revenues, are stronger. The seventh superpower is these businesses focus on positive unit economics, and they can scale at marginal cost.
Mm-hmm.
Further, another superpower is these businesses tend to be vertical. They focus on areas of the value chain that are critical, particularly around design, around production, channels, and particularly that experience with customers across any of those critical touch points of try, buy, and service. These businesses also have a superpower in acquiring, investing, to protect sometimes, to acquire, and to make investments into new technologies to keep those businesses growing. And then finally, they have an ability to attract the best and brightest of talent. And they are a career and wealth accelerator for people who come to see them through or work with them through their benefits programs, but importantly, their retention-based stock compensation programs. So these are the 10 superpowers that these high-growth companies, these hyper-growth companies that have consistently grown, outperformed peers, outperformed the market. And as we said, they have a very strong technology bias. They're mostly technology companies, the likes of NVIDIA, Netflix, Amazon, as I said, Microsoft. And I'd like to explore some of those for your audience.
Yeah, fantastic. So of those companies that you've just mentioned, which ones particularly, or maybe a couple of case studies have grown faster for longer than others?
Well, I don't think the planet has seen companies like so large grow so consistently.
Mm-hmm.
Look at Microsoft, right? They've had a range of phases. Now, $245 billion worth of revenue, and grew at that size last year, grew at more than double digit.
Yep.
Amazon has, through its whole network, revenues of more than $600 billion. Yep. And again, grew at almost double digit. So these two businesses, along with Netflix and NVIDIA, have grown consistently faster than any other organization on the planet over that time frame. So, and I think Amazon, and Microsoft are also continuing to grow and setting themselves up with investments. When you think the likes of Microsoft have invested in OpenAI,
mm-hmm.
Amazon invested in Anthropic, are all commitments to future growth in the area of obviously generative AI. So these are businesses that are continually reinforcing and investing for growth.
So for people listening, would probably say, okay, well, of those 4 companies that you've mentioned, 3 of them probably didn't exist 20 years ago, but the big one for me is Microsoft, right? I mean, they're a company that you mentioned before, it was never a straight line with Zip.co, right? Yeah. There's never a straight line to success. There's ups and downs, and there's things you need to do. Microsoft is one that's always fascinated me the most because, they've been around since the beginning, right, in the tech industry, and they are clearly a leader that is, competing with an Amazon who've come up with that new UX, the cool, sexy tool, the innovation, everything else as a recent market leader, and then they've come back and gone, back to the top as well. So, what do you know about Microsoft? Is there any?
So I think, to your point, Microsoft created the subscription playbook
mm-hmm.
For recurring revenue. They now have more than 400 million paid seats in Office 365, which created the base for the organization in the 80s as we grew up. But revenues have now grown, as I mentioned earlier, double digit to 245 billion last year. Net income, would you believe, growth of 36%.
Yeah, wow.
And a market capitalization of more than 3 trillion. That makes, with NVIDIA and Apple, the 3 most valuable companies we've seen in history, right?
Yeah.
So, and as I said, Microsoft are reinvesting. They've got an R&D investment of more than 30 billion. And they also are, have cash on their balance sheet to prepare them for the next phase of growth, particularly through OpenAI, which they are integrating into many of their B2B kind of services. So a well-managed, high-growth, large, 3+ trillion organization, which kind of proves that big can continue to grow.
Yeah. It's fascinating. And I was having a conversation literally yesterday about this, and someone said to me, "We're talking about the growth of analytics tools." It was with the university, and they were talking about how surprised they were that Microsoft BI is becoming one of the lead tools. And I said, "But they always have been, right?"
Mm.
And looking back at that, you talk about them being the largest subscription model. Everyone always has Excel, right?
Oh,
The
yeah.
majority of people have it. So they have had that subscription model, which was one of your superpowers. They've got the culture, right? People love working at Microsoft. They've got the leadership. They've had unbelievable leaders from their founders through
Absolutely.
to hired, right?
Yeah.
It's a brilliant company. When you talk about one of the other companies you just mentioned, Apple, right? You mentioned before beautiful UX or easy to use, right? Um, I'd like to explore them a little bit through these superpowers because when I look at that, everyone's trying to catch Apple. So many businesses say, I'm going to open a retail store, just needs to look like the Apple shop. Or so many people will send you a product and they just want the unpackaging, what they call it. My kids call it the satisfying peel,
Yeah. Or the
right?
unboxing.
The
Yeah.
unboxing, right?
Yeah.
This is all Apple's created in the last Apple has been around forever as well, but I think they've revolutionized what they've done and gone through that wave. So what can we learn from Apple that's different to Microsoft?
Yeah, I haven't included Apple's reviewed in the study. However, it's fair to say that over the last 5 years, its revenues have really flattened.
Yeah.
Okay, and have shown very little growth. Now, it's so whilst Amazon and Microsoft continue to grow top line and net income, Apple have had to hold their revenues over the last 4 or 5 years. They're growing their net income and their market capitalization is growing. So the market is saying that the PE ratios assigned to Apple are increasing because the market believes that Apple will continue to grow. It will create more subscription models within an ecosystem. It will navigate the shift to generative AI well. And why? Its superpower is not only its product platform on the mobile, clearly, and the iPhone and the Apple ecosystem. And I know I've got Apple, watch, phone, pad, Mac. So that garden of products is very little churn, very high switching costs, amongst some of the highest margin hardware we've ever seen. These are superpowers of design, their culture of execution. Every September, we know by clockwork, they will be shipping new
Mhm.
products. So these are Apple superpowers. Has it navigated to consistent revenue growth like Amazon and Microsoft? No, it hasn't. But has it delivered net income growth? Yes, it has. And the market cap of that business, as we said earlier on, is well over 3 trillion. So lots of superpowers, but not one that has consistently grown its top line. Rather, it's been able to comp some amazing numbers over an extended period over the last 4 or 5 years.
Yeah, and has become that leader that people have tried to catch, copy, and fail, right?
Oh, absolutely.
Yep.
Absolutely.
And NVIDIA is one that a lot of people didn't know too much about NVIDIA until recent times because of, AI has really kind of made them I mean, they've always been a market leader, but yes, it's a new one. So how does a company like that continue
So
to
NVIDIA
fend
have
off
a number of
competitors?
superpowers.
Yep.
So we know that, the growth of that business, and it's been around for 20
Yep.
years. Jensen Huang, who is the legendary founder and CEO, and importantly, recognized by its employees. If you look at Glassdoor ratings of their CEOs,
Hmm.
if you look at the employee experience, employees' recommendation, no one beats NVIDIA. So
Yep.
that is a superpower of leadership and culture. When you look at the white space it's created around its GPUs, its deep learning, its AI technologies, this business has doubled its revenue in 12 months. So in 2024, its revenues were 61 billion, 2x on 23. Its net income grew to 30 billion and it reached a market cap of 3.4 trillion. And it's gained a lot of interest from a lot of the big technology players. So much so that they're now investing significantly into their own chips and going almost, I mentioned earlier on, vertically integrated in the areas of the value chain that matter. Well, the likes of Amazon, Google are all making significant investments in their chips to try and reduce the reliance on NVIDIA-based GPU systems. So, like we see, when there are incredible growth and incredible profits, these hyper growth companies with all of these superpowers look to find value. Jeff Bezos, when we talk about Amazon's superpowers, one of them was Bezos's inspiring leadership, his storytelling. Amazon always talked about where there is profit pools, your margin is my opportunity. And NVIDIA's margins have gained a lot of interest amongst the big few with, Apple investing and trying to find their capability, Amazon investing $4 billion in Anthropic and also building its own chips that is being released. Meta also doing some work in this space, and Google. So a lot of these superpowers being applied to what I would call backward integration into the chips that help them, build growth.
So you said NVIDIA's culture was unbelievable, high Glassdoor rating. People go there, they don't want to leave. What is it about their culture, and what other companies in the studies had a similar sort of culture, which was, unbelievable and worth taking note of?
The superpower of an invention-based culture. These are companies that are focused on solving big problems for customers. They don't look to just improve the customer experience incrementally. Rather, they look to reinvent the customer experience and sometimes remove stages. I'll give you an example. Most organizations, and I've worked with a few, they'll look at the customer journey and they'll say, oh, there's a payment stage. And they'll look at, well, how do we improve that? How do we reduce a little bit of friction? Mm-hmm. Amazon, which is one of the examples I use here, say, why don't we just remove the whole payment stage? And for Amazon Prime members online, you can basically check out, not in 11 clicks, but in 1 click. Mm-hmm. And we've all heard about their Amazon Go technologies in the US, where in a convenience store, you can literally walk in and walk out. So there are no checkouts.
Yep.
The point of that story is to say this is a culture of invention where they look to any friction and remove it. Netflix is probably another great example of one of the high growth companies and their culture. They're focused on this unifying purpose of entertaining the world, making it full of laughter, empathy, and joy. And their culture talks about freedom and responsibility. It talks about performance over effort, people over rules, focused on star players over just adequate performers. And the North Star at working at Netflix is about just working in the best interest. There are no real policy-laden bureaucracy. It's about, we're going to treat you like an adult. We're going to empower you, but with empowerment comes responsibility, okay? Support and accountability. And Netflix has been one of those companies that have grown their market cap by more than 30% consistently on a compounded growth basis over 20 years.
Yeah, wow. So how do these companies attract the brightest and best people as well? Not just by the culture. There's got to be other ways that they attract people through.
Yeah, one of the superpowers I talk about is, joining these high growth companies creates huge opportunities to expand your role, learn more from the best and brightest, and to be honest with you, they can become life changing. So they attract the world's best talent, and they host. If you look at some of the numbers, they host some of the highest number of visa applications. Google has probably amongst the highest visa applications of technology, skilled people from India and China largely.
Right.
in their business. But they also attract them through their overall benefits programs, and importantly, on retention-based stock compensation plans, usually delivered as RSUs or restrictive stock units that vest over time as long as you stay there. So for companies like CrowdStrike and Atlassian, and I've in one of my businesses have tried to attract talent from Atlassian, and trying to match anywhere near their remuneration is almost kind of impossible. But these organizations like Atlassian and CrowdStrike, only a few years ago, 20% of their revenue, the equivalent of, was being applied to stock-based compensation.
You're right. Wow.
Yeah, as high as.
Yeah, wow.
So these organizations are creating great packages, great experiences, learning from the best. The rewards are incredible, and it can be life-changing and career enhancing.
Do you reckon that means that an Atlassian is attracting people that would normally start their own startup? Because if you're getting stock-based incentives, right, you can get that innovative thinker into your organization where they might otherwise go and start something themselves.
Or it can be their platform to start something and have that kind of, bootstrapping, and that they don't need to go to market. They can self-fund. And there are many examples where great product and technology leaders in these companies of high growth with these superpowers have created the net wealth to then go and start their own businesses, or go on to another, which is also pretty same story, or very similar story, where they go on to another one of the superpowers, where you'll get a Meta executive going to Amazon, and Amazon going to Google, and the like. So, again, these are, well-worn career paths.
Yeah, fantastic. How do these companies typically approach strategic investments?
Well, another one of the superpowers of these high growth companies is that they are almost active VC investors and acquirers. They make lots of venturing bets to protect adjacencies, and they invest in kind of acquisitions to control future capabilities, technologies, IP, and talent. These businesses have been some of the best acquisitions in history. You think back at Facebook's acquisition of Instagram in 2012 for $1 billion.
Mm-hmm.
Now that at the time, I remember people saying that Mark has gone crazy. That's an incredible valuation. I think from memory, it only had 9 people working in Instagram. Now it is a significant contributor to an organization of almost $1 trillion worth of value. Google's acquisition of Android in 2005, YouTube in 2006, and DoubleClick in 2007. And then more recently, and I mentioned this earlier, Microsoft's invested $13 billion into OpenAI, and now have integrated GPT and DALL-E into some of its products. And also, importantly, Azure now supports ChatGPT. Tools like Microsoft Word and Excel have got better with some of those investments. And then I mentioned earlier on that Amazon have made it a $4 billion investment in Anthropic, the power of Claude AI. And not only is a learning, but it's also Anthropic now are using AWS for AI model training and operations. So these are, gaining access to technology, but also making these bets that these big new AI platforms are using their cloud platforms. And I think one of the other insights from Amazon was that you are the sum of your capabilities often, not just your products. Example, Bezos created for his retail business, I needed enormous computing power. I needed BI and insight tools. And they built their own web services. And then they said, well, we've got this core capability. Maybe it's a business that we could go to market with. So this capability, which was not their core business, it was retail, then became the highest value contributing business with margins of north of 30%. AWS is a big driver of Amazon's total valuations, and would be, if spun out, probably one of the largest 20 or 30 companies on the planet.
Unbelievable.
Yeah.
So you talked a little bit about how these high growth companies think about products, but you've just reeled off in that last example some of the biggest companies buying some of the biggest products, right? So Facebook and Instagram. I mean, or Meta and Instagram. You can't think of a bigger platform now and stuff like that. How do they think about these products? How do they come up with those ideas and opportunities?
Superpower around products is around how do I create products that will be used by billions, interacted daily, and for those with advertising models, interacted for a long period. So examples. We've never seen a more powerful social discovery tool on mobile than Instagram. And Instagram has, on average, it's about 35 minutes per day is the average interaction.
Wow.
And an average user is going to Instagram more than 6-7 times a day. Okay. Completely addictive. If we look at ByteDance's TikTok, which has now about 1.8 billion users. But what's really interesting, those users are using that app for up to 90 minutes per day. 90 minutes. We've never seen more addictive, irresistible micro entertainment in history. The other thing that we've also seen about products is about ensuring those products have utility, that with use, personalization, whether it be Netflix or Amazon, they just get better. If I look at Amazon's, I'm an Amazon Prime user, I go to the website, and on any screen, it's completely personalized for me. It shows, and there's a tab that says products that you may want to buy again, that I bought recently. Products that I have searched for, that they said, you want to continue searching. Or products based on the algorithms that I bought or searched for that are supplementary or complementary. Now, it just gets better. And their delivery, their range, and their price, which is competitive, has meant that they just blow every other retailer around everyday requirements. So I think for these superpowers, particularly in the early stage, and in the startups and scale-ups that I've worked with, it's just about find a customer and getting them using it. Forget about the economics, because once you've got people using, you'll be smart enough to find opportunities to monetize for subscription models or advertising models. But it's about getting customers to use and find love in those products.
And those products that you just mentioned, you touched on it just before a little bit about that personalization of experience, right? So how important is that? I know it's one of your superpowers, but how do these companies really do that? Because you look at these platforms, I think you said 2.8 billion or whatever it was, TikTok users.
1.8.
1.8 billion.
Yeah.
How do you personalize for 1.8 billion people? That's a lot of people that you need to.
Yeah. Well, they're doing this. They're trying to make their products essential and irreplaceable. And we're never bored anymore.
Yeah.
These technologies are changing the way we think. There's evidence now, Tristan, that says that we are no longer have the ability nor the patience to focus in on big problems, deep problems that we all face. Rather, that we skip over things. We look for little dopamine hits, if you like. And I truly believe this is changing the way my sons and our future generations will think, and it has far-reaching implications. So they're focused on, at scale, using algorithms to make the next best interaction more entertaining, based upon the micro time that you've spent on the last little moment, or the last minute frame, or the last little video that you saw.
We used to call it, in the analytics world, it was kind of the the weird or the freaky factor, right? Like I walk into a shop and it would say, "Hey, Tristan, you need a size 10 pair of white shoes," because well, how do you know that? Because mine look a bit tattered or whatever, something like that. And we would get upset because someone would know too much about you, right? It's now the expectation of the next generation that if you don't know enough about them, they're not going to buy your product,
Yeah.
right? Because they don't have the patience to shop around and do stuff like that. So the environment has changed. And all these companies that you talk about in your superpowers as well, they've had to learn to adapt to that. AI is a major component of that. And we talk a lot about AI on these podcasts around it. And everyone has a different meaning or understanding of AI. All these companies that you've mentioned today have a strong lens towards it. AI has been around for 20, 30, 40 years, right?
Absolutely.
Where have you seen it in any of these that you think can take advantage of, or how do you feel that's something that's going to play out in this landscape as well?
Well, I think it goes out saying generative AI is the most transformational technology of our time. And these companies that have grown consistently for 20 years have seen the phases of mobile, social, cloud.
Yeah.
And I truly believe that Gen AI will either continue these businesses' success for their next stage of growth or disrupt them completely. Example, it's probably fair to say that, and you see this with the incumbents not having that have got rivers of gold. Google is probably the most famous example, monopolizing search almost, and generating almost all of its valuable revenue along with YouTube and a few other sources of revenue. Many argue that they've been slow to redefine, reinvent search, and ChatGPT and Claude and Anthropic and many others, and they've been playing catch up with Gemini and many of their investors in that space. So these are almost existential crises for these superpowers. And as I said up front, no company grows forever, and this is the technologies that can disrupt these big superpowers. But they have the cash, they have the R&D, and they have many of the platforms to make the right choices. The question will be, in the next few years, will they be making the choices for them to continue to grow, or will they be disrupted by some of their peers, or potentially by some new entrants?
Yep.
Yeah.
Kind of the world famous Kodak example, right? and
Yeah.
and not adapting to the change.
There's a lot of debate around that and whether there is a market. Could Kodak have adapted at all?
Yep.
But Nokia adapted from a forestry business to a white goods business to a mobile, but it got disrupted by the iPhone. And recently, there's some internal documents that have been released from Nokia at the launch of the iPhone, and that was the oh no, oh shit moment for Nokia. But another example, Tesla, one of those big high growth, big tech companies. I'm really bearish on its business. The PE ratios are coming down. Are they being superseded by the Chinese?
Mm-hmm.
BYD now has better range. Many say better design and better price points.
And more sales now as well, don't they? As well,
absolutely. In China, outranking. And in I think in Australia still, I think about 9.5%, 10% last year in 2024 of our 1.2 million vehicles were EVs. Tesla was the largest brand, but BYD the fastest growing.
Yeah.
So these, as I said, no company grows forever. There are a range of life stages, but these businesses, to think about their R&D investments. I mean, the cash they have on their balance sheet. Just to give you an example, these businesses that I've talked about, specifically Meta, Google, Amazon, Apple, they have more than $240 billion that they've invested just last year on R&D. When you look at their balance sheets, they have more than $450 billion worth of cash just on their balance sheet.
Yeah.
Okay. They're not returning it to shareholders by share buybacks. So they're ready to make some big investments in acquisition or innovation, but they are very much focused. If they miss this generative AI wave that we are moving forward to, they will no longer be the big tech that they have enjoyed over the last 20 years.
And I think that's important. And back to Microsoft and Apple, right? I mean, that is what they have done, and they've been around for longer than any of these companies, right? And they have just reinvested in R&D development, and they've just continued to grow over time. And I think that's fascinating, and that's one of the lessons that we take out of it. And I'm sure all companies should take out of this is that, if you don't invest, if you're a technology company and you don't invest in what's next, you could become Kodak.
Yeah, I think all organizations need to have leaders that can see the future first.
Yeah.
They're talking about scenarios of the future, and most boards that I've worked in, they have focuses on the future only through the lens of risk.
Yeah.
Okay. What are the risks? What could break the company? How do we mitigate it? But I think great adaptive leaders, and this is what we see in some of these superpowers, they also look at it not only through the lens of risk, but the lens of these are the technologies that could create tailwinds, huge opportunities. When we look at what drives success around startups, would you believe that the moment matters most? I have this model of the six M's. Moment, motive, momentum, market, management, and the like. And Stanford did a study that said the moment, which is, does the technologies all coalesce? Does the ecosystem now exist for this problem to be solved, right? And it's those companies that are ready to take those opportunities when that ecosystem exists to solve that customer problem. And I think through these superpowers that we've talked to today, these 10, applying these to your business at any stage and in any size of company, because all these organizations started somewhere, right?
Yep.
And the Amazon story is probably the one that I'm most familiar with. And I've created a company of 3 trillion market cap.
Yeah,
These 10 superpowers can be applied at any company.
We're going to run out of time, so I'm going to ask 2 questions to end with. So the last one alluded to good leadership, right, and different types of leaders and how they lead. So what are some of the key things leaders or aspiring leaders should be considering in the technology space? It can be, not everyone's going to be a Jeff Bezos or a Bill Gates back in the day, or any of these amazing leaders out there. Like, what should they be looking at? Characteristics.
So look to Bezos, Reed Hastings, Jensen Huang.
Yep.
They're the 3 that when you look at the data around their impact as a leader and their impact on culture and business strategy, you'd say probably are the best examples. And I think leadership can be applied at different stages of the corporate life cycle. In the early stage, you are looking for that visionary, product player. Think of this as the Steve Jobs early, the visionary. In your scale up, you're looking for someone who's really focused on the product market fit. This is the pragmatist, if you like.
Mm-hmm.
Then you're looking at the high growth stage as the builder of product suites, the builder of networks, the builder of markets, right? And then later in the stages, and this is not the companies that we've been talking about, when you get to maturity, you're looking for the optimizer, the person who's the leader who's protecting. And then in the decline phase, you're looking at those that are looking to yield and cash cow these businesses. But to answer your question simply, leaders who ultimately understand the future, see that future first, can take others with them around a vision, can manage both strategy and brilliant execution. And this is where the Apple shift in leadership from Jobs to Tim Cook.
Tim Cook, yeah.
Tim Cook was the pragmatic, brilliant, disciplined executor. And that was the different phase that Apple went through. It still had growth, but as I said earlier on, that growth, at least in a revenue, has kind of flattened out. So there are very few founders that can go through all phases of that journey, right? But I think it's about role modeling the culture, taking others with you, seeing the future first, understanding the strategy and driving that for growth, and then ultimately knowing when to hand over to the next leader.
That's a really good point to end the podcast on, because I think that's highly fascinating. There's the right leader at the right time. I mean, there are a few leaders that kind of can fulfill all the different eras, and they're unique individuals, but
Very
companies recognizing that, as well as recognizing their products need to grow, as well as recognizing the cultures grow, they evolve over time. Everything grows and changes, and to keep up in the market, you've got to grow and change with it as well. Yeah, exactly. We didn't have AI. Well, we've had AI forever, but we didn't have it as prevalent in our businesses as we do today. We didn't have mobile devices as smart devices 15 years ago. We didn't have data and analytics 20 years ago. So all these things that move their way through are really critical to how businesses operate. Cloud, compute, all these sorts of things. So, John, great conversation. There's a lot unpacked here today. Fascinating to go through it all. Any final thoughts before we end? Any predictions that we should consider for 2025? Anything you want to end on?
No, I just think that applying some of these learnings, practices to your business model could lead to an opportunity or growth. The predictions conversation, that's for another podcast.
Exactly. No, good idea. Good idea. Well, you've seen a few of these, and I know you've successful companies that have been through the ups and downs and to come out on top. So great to have you on the conversation, and have a conversation with you on the pod today. And thanks for joining us.
Thanks, Tristan.
If you found today's episode interesting and want to hear more about our Make Tomorrows, please subscribe to our channel.